Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, February 25th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here the ES took a big down day in the previous session, huge selling pressure here. Tried to get off the mat late in the day, but eventually fell back down. One of the biggest days here over the last couple of years. And what you'll notice here is I have the PivotBoss Advanced ADR indicator set to a 3-day range to quantify this move. From that high to that 3-day low, you get this bar right there. And that's one of the biggest 3-day moves that we've had over the last 15 months or so. And one thing you'll notice every time you see a significant high range like that, so if we mark this over and show the last few here, you'll notice one thing: every time you do get that big 3-day pullback, you tend to see a snapback, which is a quick 3 to 5 day snapback, and then that snapback can actually be a longer term push higher. This was also one of those cases where we had a big 3-day push down, and then this thing snapped back really quickly on a 3 to 5 day basis and then pushed higher on a longer term basis. Again, are we going to be able to see this market hold here? Because if so, we could see a quick 3 to 5 day bounce at the very least. And at the most, it could continue down the path of this overall trending market. Now, again, so just mentioning here the 3-day range, very, very high. And when that tends to be the case, a 5% pullback type of deal, you tend to see a snapback reaction. With some extreme reversals here setting up at the moment, where you have a huge sell-off day the previous session, and right now you have a smaller digestive day with the open currently, or the last price currently above the open. That would be a buy signal for a push higher. This is what I call the extreme reversal setup, the one that I documented in chapter 2 of my book, Secrets of a Pivot Boss. And that's the one here that, again, has played out right here, where you had a huge down day with this day here, and that's the snapback. You see it right here as well. You see it right there. It's those big down days followed by a bullish day the next day. And then that right there tends to lead to these big snapback reversals. We'll see if that plays out. 2-day lows are going to be very important, because not only are they 2-day lows here, but it goes back over the course of the year so far. So 3,200 here is going to be very important. Want price to stay above there. If price holds like this, there could still be a test lower tomorrow, Wednesday, but a failed low could lead to a huge push higher, something like this here. So right now, looking for signs of a rejection or a hold here. Otherwise, a failure to hold 3,200 could be significant and could open up a return back toward the 200-day average at around 3075. Alright, that's enough on the ES here. Let's take a look now at the NQ. Very similar right here. Again, huge pullback. This is one of the largest 3-day ranges that we've seen in years for the NQ. So if I bring this all the way back, this is a 5-year view. You got to go back at least 2+ years to grab the last one that was that high, and I don't even believe that one was as high. So this one's the highest here in many years. So major high range on a 3-day range basis, and again, an extreme reversal could be setting up, which could lead to a bounce. If that's the case, we have an impulse sell-off with a bounce that could lead us back to the midpoint. That could give us a key range to work off of moving forward. So again, this impulse sell-off across the market here, ES, NQ, YM, whatever the case is, if we bounce back toward the mids, that could give us great key ranges moving forward. All right, let's take a look here at the crude oil chart. Crude oil right now showing a bearish rejection in the 60-minute time frame after taking out multiple highs over the last few hours, and is now turning down. This one had a ton of promise. We had this thing going much higher. We did get a little bit of a tail here, so we mentioned a pullback as deep as 50.60 to 51 could be defended for a push back toward 57s. We've gotten that pullback to that zone. We started to see some lift off that area yesterday, but haven't really seen a continuation. Instead, we've sold off from the highs here of this pullback, which is near at R3 on a 1-minute basis here. So again, showing some weakness off the highs. This is the most important level right here, 50.6. It's the 50% key level, or the edge of the key range. And that right there, again, if it can hold this zone, we have a shot for this level. Failure to hold that level suggests more weakness ahead. So we'll see how this continues to play out. Right now showing a bearish 60-minute rejection, which could suggest more weakness ahead. let's take a look now at gold futures. Now this one had a major push higher the previous day, but it was showing initial signs of rejection in the intraday, looking something like that. I mentioned that that could lead to a return back towards 1660 by the end of the day, and we got it. We got that move back towards 1660 by the end of the day. Now we're seeing a failed low, not quite at the 8 period, but very close to it, and it's bouncing higher. A bit of a 3-point reversal or inverted head and shoulder type of pattern developing in a 15-minute time frame here, with a nice compression. So if price can get above 1665, that opens up more upside ahead back towards 1680, maybe even higher. And again, this market's been very bullish, so all pullbacks continue to be buying opportunities until proven otherwise. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.